So I have a lot of cool content for you. This webinar is about day trading. So how to get started day trading, get trading right. We're going to talk about a few different things with respect to day trading, but I want to make sure you guys are in the perfect mindset before we get started. So I wanted to share something with you from earlier. So, I took this screenshot because I posted, I have a Facebook following, I have a YouTube following, I'm on LinkedIn, all this good stuff. And, you can see here, I posted, hey, I'm hosting a live webinar on day trading, October 1st, 8 o'clock. And one of the comments was, hey, I will attend if you can prove to me you are now rich because you are a day trader. In other words, I believe what you preach if you're actually doing what you will be preaching or else no. So you can see my response was, please do not attend. I'm too busy for games like that. And the reason I posted this, guys, is I want to make sure you're here for A, the right reasons, and B, you're in the right mindset. And one of the quotes that came to mind when I saw that was, the highest form of ignorance is to reject something you know nothing about. Meaning I'm giving away free information. You don't know me, but come check it out. And so I encourage you, as you listen and you pay attention to this information, make sure you're here for the right reasons. Make sure you're here to learn something, hear something with an open mind. And I'm going to share some quality content with you. But I just thought, the highest form of ignorance is to reject something you know nothing about. And so get more information about something, take a deep dive into it and make sure that it's for you. So I want to make sure everyone's here for the information. If so, stay on the webinar. If not, trust me when I say just log off, do everyone a favor if you're not here to get this information, but I believe you all are. So let's go into the agenda. The truth about day trading. That's what we're going to talk about because I get a lot of questions about day trading. Should I day trade? Are you a day trader? I want to day trade. Then we're going to talk about the tools that are needed to be successful day trading, because there's some tools you're going to have if you want to be successful in this industry, whether it's day trading or not. And I'll tell you this right now, I don't day trade anymore, and I'll talk to you about why I do not. But when I did day trade, I was pretty successful at it, making anywhere between $500 to $4,000 in one day. Now look, and we're also going to look at using options to day trade. That one's going to be an interesting module. I pulled a case study from a famous stock that people look at today, and I compare and contrast what you can make day trading and how to break that down. So just a little bit about myself, because, this is the internet, right? So you don't know me from the guy walking down the street. So in the upper left-hand corner, you can see I'm from Michigan. So if you're wondering, I'm from Michigan. If you're from Michigan, hey, maybe we'll pass each other on I-75 or 696. But I graduated from Wayne State University. I have a bachelor's degree in finance. And trust me, I love Wayne State, but it taught me nothing about stock trading. But I did go to Wayne State University. You can see down there is my lovely wife. She's actually sitting here in the room with me, helping me run this webinar, which is awesome. Sometimes we get to work together. In the top right hand corner, that's me and my good friend Zoe, or Falonzo. We went scuba diving in Cozumel, Mexico, and had a lot of fun doing that. And these pictures have absolutely nothing to do with day trading or stock trading, but it's really to let you into my life a little bit and realize that I'm a human being. I'm a person. I'm at home just like you. And I'm just trying to be better at this stock market game than I was the day before as well. So here's a couple pictures of me at the Microsoft store, at the Caribou store in Royal Oak. Those are places here in Michigan. If you're not from here, then you won't know those stores. But we do local trainings, local stock market meetings and stuff like that. And there's just a couple pictures of some people who come out to the meetings and get some of this information. Now, for those of you who like to see proof and different things like that, I always talk about when I first got started trading, I was about 22, 23 years old, and I took a $10,000 student loan and I turned it into a six-figure trading account. And so you can see that was my trading account. I turned it into six figures and done it, several times since then. I've also lost six figures before in a year, lost people's yearly salary. So I have some skin in the game. I've been doing this for a while. And that's one of the reasons I'm passionate about sharing this information, because when I got started, I paid $4,000 to take a stock trading course. I paid another $3,000 for some software, $2,000 for some mentoring. So I spent about $10,000 just trying to get my foot in the door. And I realized that people with the information very rarely share the information with the people who don't have it. And everybody else is just skeptical, right? So I like sharing this stuff and really giving you this information. So let's get into the content, because that's what you're here for. So let's talk about the truth about day trading, right? So let's talk about the good first. When you think about the opportunity you have when it comes to day trading, the good is that you get to work from home. So it's awesome, especially here in Michigan. It gets cold. We get a ton of snow. It's beautiful. If you don't have to go out there, clean off the car, shovel the driveway, you can just work from home. You also work for yourself, which is awesome. And, anybody who's ever worked for themselves know it's nice to not have to have a boss, to not have to go in and answer to somebody, to not have to sit next to that nagging or negative coworker. It's just you, it's the computer, it's your high-speed internet connection, and that's it. And that's one of the beauties about day trading. Now, the unlimited earning potential, I wish I could have put an asterisk right there. So obviously you can't make, you can make as much as you want, but it also is limited to the opportunities that the market presents during that day, as well as how much money you have in your account to take advantage of the opportunities that present itself throughout the day. And so those are the good. I hear people all the time say, I want to work from home. I want to be my own boss. I want to make unlimited amounts of money. Well, this is an industry that you can do it in. But most people don't talk about the bad, right? So what is the bad? Well, the bad is you work from home. The negative with that is there are no coworkers, guys. There's no friends to talk to. There's nobody to go to lunch with. None of that. There's no workplace gossip. You're not going to meet, some people meet at work and get married. Well, not going to happen here, unless you're day trading with someone else on the internet. Maybe you do internet dating, but my point is you work from home. So sometimes that can be a bad thing. You're just home by yourself. It's kind of lonely sometimes. You work for yourself. That could be a bad thing, because if you're not disciplined, let's just put it quite frankly, you won't be working for yourself for long, right? You'll be out there looking for a job, because you have to be extremely disciplined to make money in this industry. And I think you should understand these things before you start investing a lot of time and resources. And I'm going to be a trader. I'm going to be a day trader. It's like, make sure you know the good and the bad. And then there's an unlimited losing potential. What makes it unlimited? I've seen people lose their whole trading account, then go mortgage the house, mortgage the car, and then put more money in the account and then lose that. And so you can get to a point where you're gambling and you don't know when to stop and you don't know when to quit. I personally teach strategy and not gambling, but some people approach this as gambling. And when you do, there's an unlimited amount of losing potential. Now let's talk about the ugly. The ugly, when it can go from bad to ugly, is you can get depressed daily. What do I mean by that? Well, every day is not a winning day in the market. So I want you to imagine what would happen if you woke up every day and you lost $100 for 5 days straight. You'd probably be depressed every day. I mean, by the third day, by Wednesday, you're like, you know what? I'm just going to sleep through the day, because if I lose another 100, I might lose it, right? And so you could potentially get depressed if you don't have the right mindset trying to be profitable in this industry, and if you don't have the long-term vision. You could have 5 losing days in a row, but there's 30 days in a month, so the market isn't open on the weekend, so you're trading about 22 of those days. So maybe you're profitable the other 15, but if you don't have that long-term mindset, you could get depressed if you lose 2, 3, 4, 5 days in a row. The other thing that may be ugly about this industry that most people have probably never thought about is that there's no real freedom if you are a day trader. So what do I mean by that? Your goal is to make money daily. and you hope it adds up to enough money at the end of the week or the month to pay the bills, pay rent, pay the mortgage, whatever that case is. Well, think about this. How do you take a vacation when that's your lifestyle? You have to be back in front of the computer tomorrow to make some money, unless you're making it in big chunks at a time, which we'll talk about. But you could be in a situation where you don't really have any freedom. And for me, that was one of the reasons why I don't day trade anymore. I now short-term trade, which means all my trades are normally 30 days or less. So I like to set a trade and then live my life for the other 28 days in a month. And I come back towards the end of the month or whatever that time frame is, and I close those trades out unless the market takes a turn for the worse or something and I have to close it out sooner. But normally I put a trade on and I don't come back to look at it for at least 2 weeks, 3 weeks. I check it daily to see what's going on, but I can do that from my cell phone, from my laptop, wherever I'm at. But if you're day trading, you need to be in front of the computer because every minute counts, as you'll see when we get into that portion of tonight's webinar. And then the income is less predictable. I can look at a chart and have a great idea of where the stock is going over the next 30 days, the next 6 months. But when you're day trading, it's really unpredictable. I mean, someone can fly a plane into a building and tomorrow, you don't have a trading opportunity. Or maybe you do because the market's selling off. The president can make a speech. Some news report can come out. It's really unpredictable. So you have to be very flexible and ready to move and shake and blow with the wind when you're a day trader. Right? Now let's talk about the tools you need to day trade. So if you're thinking about getting in this industry, maybe you're already in this industry, you're going to need a computer, and I put preferably with 2 monitors. Well, why? There's a lot of stuff going on. You're going to have charts. You're going to be placing a trade. You're going to be looking at research and news and stuff like that. And you'll find you need to separate some of that stuff between monitors. You need a high-speed internet connection. I'm going to tell you right now, if you're cheap on your internet connection, this is not the industry for you. If you're battling with AT&T or Comcast trying to keep your bill at $20 because you don't want to pay for the higher speed internet connection, this isn't the industry for you because in this industry, speed matters. You need that chart streaming. You need that information coming in at you. You don't need it slowing down or freezing or having to refresh because your internet connection is slow. Here's the thing. If you're a day trader, you need a backup internet connection or a mobile hotspot. And here's the reason why. If you enter a trade at 9:30, right at the opening of the market, and your Comcast or your AT&T, or there's a storm going on outside and the lines go down in the back, how are you going to get out of that trade? Because if you're a day trader, your goal is to get out of the trade the same day. So you're going to need some type of internet connection that's a backup to say, hey, whether it's your cell phone, I need to get on here so I can see what's happening so I can close this trade out. So I just want you to keep that in mind when you start thinking about what do I need to be successful in this industry from a hardware perspective. Now, from a software perspective, you need a brokerage account that's going to allow you to have streaming charts. And here's the reason why. You're going to be looking at this information on a daily chart. And what I mean by daily or intraday chart is when you're looking at a stock chart over a month, you're looking at days. Well, when you're day trading, you're looking at minutes. So let me turn my drawing tool on here. You can see right here that this is a 2-day candlestick chart, and it's on a 5-minute interval. So all these bars you see, this is Facebook. I actually took this screenshot today. I took it at about 6 o'clock down here so you can see. So these bars you're looking at, this red bar, this green one, this red one, these are all 5-minute candlesticks, which means you're making decisions up to the minute. You need to know every minute what's happening with that stock. And you can only do that if you have some software, whether it's paid software or whether it's free software from your broker that will allow you to stream intraday charts or minute interval charts up to 5 minutes, 3 minutes, whatever the case may be from a software perspective. The other thing you're going to need to day trade is streaming stock quotes. And these are things that nobody told me about when I got started. When I first got started, I would sit in front of CBS Market Watch and just watch the number on the stock change up and down all day. I didn't realize I could look at a streaming stock chart and see what was happening, and then also go in here and look at streaming stock quotes. Now, what are streaming stock quotes? Well, these streaming stock quotes is real-time change in the market. So when someone buys something or sells something, that's happening real time. But there's another component to this down here, and you can see all of the orders that are waiting to get filled. So what does that mean? This means someone on the DX exchange is wanting to buy 3 shares of Facebook at 76.80 there. It's kind of small. Hopefully you can see it. This one means someone on the NASDAQ is saying, hey, I'm willing to buy 25 shares at 76.59. So this is the buyer side. Over here is what people are willing to sell it for. So someone says, I'll sell it, but I want 76. It looks like 76.64. So, and I'm only willing to sell 5 shares. So you can kind of go in here and look at supply and demand. So that's what I want you to get from this. If you're going to be any type of trader, especially a day trader, you need to have a way to see what kind of supply and what kind of demand is out there. Is there enough liquidity for me to even trade today? Are there enough people willing to sell enough shares for me to trade today? Because if you're trying to buy 1,000 shares of Facebook, and I'm looking in here and there's only about 17 or 20 shares, 13.5 plus the 2 down here, 20 shares to be sold, that might not meet my needs for the day. Now, I took this screenshot after the market was closed, so that's why there's not a lot of orders available. But this is where you want to come to look and see what the liquidity is like. What are the orders like? Can I jump in and jump out real quick and cover a 50-cent spread? This is how you're going to do it. You're going to need streaming real-time quotes. Now, let's talk about the strategy behind day trading, because I'm going to give you some actionable items to walk away from this webinar with. So when you look at the strategy of a day trader, you know, your goal is to make money daily. The other thing is you want to do high volume trading. So when I say high volume, you're going to want to pick up 100, 1,000, 2,000 shares, because you're trying to capitalize on small movement. And so you need enough volume behind your buying power or behind your trades in order for, if you made 50 cents, for that to make enough money and make enough sense for you in the day. You're going to want to find stocks with a high ATR, which is called the average true range. We'll talk about that when we get to that slide. And then my favorite part is we're going to talk about how to leverage up with options. And again, make sure you stick around to the end of this webinar, because we're going to walk through a real live example of how you can leverage up with options and what that'll mean for you financially compared to if you could only buy the stock. So let's take each one by one. So let's talk about the day trading strategy. Well, it's pretty simple. Your goal is to make money daily. If you're looking at a calendar, every day is payday. Now, I know some of you are probably like, I wish, hey, I can live with every day being payday. But when you're a day trader, truly every day is payday. You have to go into every day thinking, I'm here to make $500 a day, or whatever your goal may be. Every day is payday. Now, with respect to high volume, you're only looking to make 1 to 2 trades per day as a day trader. And so you need to put volume behind that trade. Just an example right out of the blue. Let's say you're buying 1,000 shares. Let's say you're buying Facebook and it only moves 50 cents, or maybe whatever stock you're looking at only moves 50 cents. Well, if you can only buy 100 shares and that stock moves 50 cents, you made $50. I can tell you right now, it's $15 or $12 commission to get in the trade, $12 to get out. So $24 of that $50 just went to commission. You can't feed a family making that type of money. But if you can buy 1,000 shares and cover 50-cent movement, all of a sudden you just made $500 in one day. That's a totally different lifestyle. See, it's not about trying to catch a stock that moves $10, $20, $100. It's about small movement, high volume. So if you take nothing else from this, when you're trading, it's about small movement, high volume, especially when it comes to day trading, because I can confidently wake up and say, I know the stock is going to move 50 cents today. If I can just catch that 50-cent spread with 1,000 shares, I make a $500. I'm going to go back to watching TV or go back to bed after that. So that's what it's about. Now, with this 1 to 2 trades, high volume, what I want to share with you is look at this chart of Facebook here, and I'll show you what I mean by that, about the high volumes. Facebook, this is October 1st, so this is where Facebook opened at, about 78.50. So let me turn my drawing tool on so you guys can follow me. So right here is where it opened at, and I got 78.50 because if you come over here, you can see it kind of corresponds with that line, about 78.50. Now the stock sold off and fell down here to about 76, let's just call that 76.50. So if it opened at 78.50 and fell to 76.50, it moved $2. So again, if you were able to buy 1,000 shares, you could have made $2 on this stock from the open. The market opens at 9:30. So this is 9:30 about right here. It fell down to here at about almost, let's just say this is about 10:30. I'm going to draw X. 10:30 about right there. So you mean to tell me for an hour's worth of work doing this area, if I could have caught this stock and had 1,000 shares, I would have made 2,000 in the first hour, and then the rest of the day I would have not had to even watch it or pay attention because it just did nothing the rest of the day. It just traded sideways. So that's the power of having high volume behind your trades when you're day trading. So let's take a look at that example. So if Facebook was at $78, and we're going to walk you through what this would mean for you. Again, if it was at $78, and here's why we chose 78. Right here, it opened, again, I told you at 78.50. You can see, well, it opened at about, maybe this is 79, between 79 and 78.50. Well, it's not like you bought it the first thing in the morning because you needed to wait and see what direction the market was going to move. So that's why I chose $78 in this example, because you may have said, all right, let me give it 5 minutes, 10 minutes, 15, 20, 30 minutes. Now at this 30-minute mark, you see how this very big red candlestick just like, all right, it sold off and now it's getting ready to sell off again. So maybe you said, all right, this is my time to buy because I have enough information to say Facebook is not moving up for the day. It's actually moving down. So with Facebook moving down, you're gonna be able to see that if you bought it at 76.50 here, then it sold off down to here and you say, all right, I'm ready to get out. I only try to make $1, $1.50 a day. This is where you're going to get out at. And so the stock you sold short at 78, you bought it back at 76.50 and closed out your trade. That's $1.50 per share, as you can see over here. So let me walk you through what that looks like financially for you. So, and this is making money on the downside because Facebook didn't go up, so you can also make money on the downside. I'm not going to get too in depth on how that works. If you're not familiar with that, we'll talk about that in another course. But let's just say you sold Facebook short at 78 and you bought it back at 76.50. You made $1.50 per share. But here's the thing. In order to do that with 1,000 shares, right, $78 at 1,000 shares, you would have had to have $78,000 available. Now stick with me because I know some of you might be like, I don't have that type of money. I might as well log off now. So stick with me to the end of the webinar because I'm going to show you how you can fit this in your budget by leveraging up with options. So if you bought it back at 76.50, 1,000 shares, you paid $76,500 to bring it back. So your profit Right here, you sold it to someone else at 78,000. You sold it short. You had to buy it back, which you bought it back, 76,000 right here. And you know what? I left the 5 off for 500 from over here. And so the difference between the two is this 1,500. Again, this should be 76,500 right here, guys. I left the 5 off. But you can do the quick math and see the difference between that is you made 1,500. To me, I would never put $78,000 at risk just to make 1,500. The mathematics don't add up, but I wanted to show you what that would look like. Now, you may try this stock if you're just a stock buyer and you're not an option trader, you may look for stocks that are only $30 or less because you don't want to put up 76,000. Maybe you look for stocks that are only $15 or less. But I can tell you those stocks that are $15 or $30, they may only move 50 cents. They may only move $1 in a day. But let's talk about what would happen let me talk about the average trading range first, right? So your strategy is for stocks under 50, and I really should say stocks under 30, you want them to have an average trading range of $1 to $2 because you need movement. You need to make 50 cents, $1, $1.50 on these stocks. You need to put volume behind it. If you're trading stocks over $50, so you're trading the Apples at $100, you're trading the Googles at $500, you're going to look for stocks in that range that have an average ATR, average trading range of $5 to $10. And let me break this down for you. Let's just say Facebook opened up at 65. Well, then it went up to 67. And at some point throughout the day, it went down to 64. So from 65 to 67 is $2. From 65 to 64 is $1. So the ATR on this stock, just using this example, would be $3. So the average range that it went up and down throughout the whole day was $3. So it fits the criteria. You need it to be between 1 and 2 if it's a stock under 50. And, well, I'm sorry, this is a $65 example, but the point is you need movement on these stocks. And then you want it to move maybe between $5 and $10 as you're looking at stocks over 50 or over the $100 range. Now, let's talk about leveraging up with options. So I took the liberty of taking a snapshot of some option chain for this stock for Facebook. And so same example, right? If we were to buy it at 78, but we're using an option. So on this side of the screen, we're only going to look at the put options. So we're going to look at if the stock went down, how do we make money if it goes down? So we're going to look at that on this side right here. So if we go down here to 78, which is where you would have shorted the stock at, and you look at the option contracts, you'll see in this column it says it had a change of $1.35 on the day. So that option changed $1.35 on the day. So if it moved, so that's a plus sign, which means it went up $1.35. So the way puts work is if the stock goes down, you actually make money. That's a sophisticated strategy, but trust me, it works. It's beautiful. So as the stock went down, the option gained value. So if it went up $1.35 on the day, well, what did it start out at? Well, it ended at $1.68. You can see that right here. So $1.68 is where it ended at. $1.35 was the movement on the day. So it had to open up at about 33 cents per option contract. So follow me here. It's going to be a little bit of math. So if you didn't like math in school, you better love it now because it's going to be a little math involved, but follow me. All right. So you paid 33 cents, assuming you got it somewhere near the open. And then at some point throughout the day, it moved $1.35 to close at $1.68 on the day. Let's talk about how that looks financially for you. So option contracts trade in 100 blocks. So when you buy one option contract, it controls 100 shares. So simply put, if you wanted to control 1,000 shares like we did in the other example, you'd have to buy 10 option contracts. And in this case, we're talking about puts. So you'd have to buy 10 put contracts to control 1,000 shares. So your total cost would be 10 contracts times 33 cents times, actually that should be 100 because it controls 100 contracts. So we'll just scribble that out. It's going to cost you $330. So if it ended at $1.68, that $1.68 times 10 contracts times 100 is how we got this $1,680 that you're seeing right here. So this was what you sold it for at the end of the day, but this is what you spent to get in that trade. You would have made $1,350. Now, let me ask you this. How many of you on this call or on this webinar have $330 versus the $76,000 that you needed to buy 1,000 shares of the actual stock? And what we were looking at is weekly options here. Let me go back and just show you. These are weekly options. So we're looking at the October week 1. That simply means this option we're looking at expires this Friday. So that's how we were able to get it so cheap. Again, I do a whole training on options, but inquire with me afterwards for that, because that would be a whole nother webinar to explain every little detail of the option. But I did want to come back and say that we're looking at the October week 1, which means it expires Friday. That's why we were able to get it for so cheap. But if you're day trading, all you care about is today, which is why you only want to trade weekly options if you're leveraging up with options. So let's look at the stock versus the option example again. So on the left side here, same example, shorten the stock at $78, 1,000 shares. You would have needed $78,000 in your account, and you would have needed that just to make about $1,500. On the right side, trading options, or should I say leveraging up with options, you would have need $330 to profit $1,350. So yes, you made $250 more on the left side, but look at what you put up. You had to put up or risk $78,000. That's huge risk. On this side, if I was wrong about the trade, we risked $330 that day. So that is how true traders look at stocks. They think, what's the risk and what's the reward? If I'm messing with a stock that moves on average $1 to $2 a day, what am I risking to make $500, $1,000, $1,500? And this is a good risk reward trade. $330 to make $1,350. I take that trade all day long. But I want you people who are working a job or who hear about people making a lot of money in the stock market, you always think, well, how do they do it? I don't have any money. Oh, I'm going to wait till tax return. It's not about waiting a tax return. It's about not going shopping next weekend. It's about not going out to eat and getting together $500 to $1,000 and then getting a mentor, getting a coaching, getting a training to be able to spot these type of transactions so that you can make this type of money. And I guarantee some people don't make that in a day at their job. They don't make it in a week at their job, $1,350. If you get good at this, you can do it within a day. But again, keep in mind the good, the bad, the ugly. You could end up being in front of a computer every day at 9:30 working by yourself. But sometimes there's a small price to pay to make this type of money and have some freedom. It's up to you. So, oh wow. So that was the last example. We went through that pretty quick, which brings us up at the top of the hour. So what I'm going to do is I'm going to open up the line for any type of questions you may have about day trading, about stock charting, just anything about this webinar. And we'll take this information, we'll post it, we'll post a replay for a short period of time for those of you who want to see it again. And so let me open up the line and take some questions and answers. All right, guys, so the line is unmuted. Also, if you're not on the mic, if you have any questions, you can type them in the chat or the question and answer box. So is there any questions out there? Any questions at all? If not, no worries, but I did want to open up the line to see if there are any questions out there about day trading, about the examples we went through. Okay, well, real quick, I'm going to take up, I think I just saw a question come through. Gene Lowe says, Jason, can you explain how you got your profit with the put option? Sure. So let me mute the line again since there's no questions from that side. So yes, let me go back to the put example. So first of all, Gene, actually let me go back to the actual chart. So the first thing you'll notice with a put option, when you're trading puts, you effectively make money if the market go down, because here's what the put option is saying. When we go to the put option example, what this is saying is this $78 put, that is saying when you sell that or you buy that, you're buying the right to sell Facebook to someone else at 78. So if I have the right to sell it to you at 78, and then I just showed you in the chart right here that it fell down to 76.50, because it fell to 76.50, I have the right to sell it to you at 78, which means I made money, or that put increased in value by the stock falling. So now I can go to you and say, hey, I'm going to sell you Facebook at 78, even though it's trading at 76.50, because they have to buy it from you because you have that put option. You have the right to put it to someone. So that's how you make that difference in between there. Now, the option in this case moved $1.35 because there's still some time left on that because this option expires Friday. So that's how you made the $1.35. You bought the option at 33 cents when the market opened somewhere between 9:30 and 10. And then as the stock fell, that option you bought for 33 cents, you were able to sell it for $1.68 because you have the right to sell Facebook to someone else at 78, even though it's trading at 76.50. So does that answer your question? Go ahead and type in the box if that helps. And Dennis Radford said, and this is how you make money on the decrease? Absolutely. So this is an advanced strategy, and this is how you make money when the market is going down. So if you ever talk to someone that's not a sophisticated trader, they'll say something like, it was a bad day in the market today, or everything was down, I didn't make money. Well, if you only know how to buy stock, you only make money if it goes up. But once you start to learn how to trade options, you actually make money if the stock falls down. And that's what a put option does. It allows you to profit by the stock going down. Harvey said, what happens when it increases? So great question, Harvey. The opposite happens. If Facebook starts to move up and you have a put option, your put option starts to lose money. So that 33-cent option starts to race towards zero. That's a great question. Now, if you're still looking at the screen here, if Facebook was moving up, we would have looked at this side of the options to look at what we call bullish options or call options. But because Facebook was going down, we looked at this side over here for put options. But had Facebook opened up and went higher on that day, we would have looked at, again, this side right here. I would have been looking at call options. So I would have came down here to 78 maybe. I might have bought this option for 22 cents. And instead of it losing $1.18, it probably would have gained $1.18. That's just a hypothetical example. So I would have went to this side versus coming over here to this side if the stock was going up. So hopefully, Harvey, does that answer your question? Gene Lowe says, yes, sir, but how did you get the final profit? Okay, Harvey, glad that answered your question. Emin, give me 1 second. Let me go back to Gene Lowe's question on how did I get the final profit. So let's go back to that slide, the option strategy slide. Okay, so here's the thing. You bought in the morning at 33 cents. You bought 10 contracts. You bought, and each contract controls 100 shares. So remember right here, I had 1,000. That was a typo. That should just say 100. So that would cost you $330, assuming you bought it before it fell. Now, as the stock fell, the option moved up to this $1.68, and I'll go back and show you. So something you bought for 33 cents, you can now sell for $1.68. So if I'm selling it for $1.68 times, let me just write it out, $1.68 times, again, we bought 10 contracts, times each contract controls 100 shares, I'm able to bring back in now $1,680. But I spent $330 to get in that trade, so your profit at the end should be $1,350. So I hope that makes sense on how we got that profit. Gene, does that make sense? And then Emin says, Jason, what's a good stock for a short-term trade? So, Emin, great question. So, and I hope I'm saying your name right. If I'm not, please forgive me. What's a good, the way I pick stocks, I don't come in every day and say what worked yesterday works today. I use software to scan the market and look for certain setups and pick out from there. If you guys want, I could open up the software and look at it real quick since we still got a little time left. If you guys want to see that, type yes into the box. Emma said, please. All right, let me see if I can pull up my, okay, Dennis says yes. So while that's loading up, did you guys find this webinar valuable? Did you get some good stuff out of this? Did this kind of open your eyes to day trading or trading in general? I see some yeses. Good deal. And why this is, Gene, thank you. No problem. And I tell you what, while the software is loading up, here's what a couple things I would suggest or you know, put out there to you guys while that's loading up. If you like this type of stuff, you know, and you want to connect with me, do me a favor, go to Facebook after the webinar and connect with me on facebook.com, the Brown Report, and that's asking me to log in, but come over here, like the page. If you got comments and stuff, leave them, different things like that. Also, I post a lot of tutorials on my YouTube channel, which would be youtube.com/the Brown Report. It's .com, and I believe is the username because that is how it was available. So, you know, feel free to connect with me. Subscribe to my YouTube channel. There's a ton of videos in here. I'm not going to play that, but ton of videos in here. You can see my crazy face. I also got a video in here called Introduction to Options, totally free. I'm actually going to be pulling it down off YouTube, and I may be posting it behind our member wall. But for now, it's just a bonus, a free intro to options. So that's a really cool video and some cool stuff in there. So feel free to connect with me there. And I think the software is up So let me bring it over here to the screen so you guys can see it. Keith said, very informative. Hey, thanks, Keith. That's what I'm here for, man, to share some great knowledge, some great content, and, hopefully help someone become a better trader than they were yesterday. Would you trade Baba? Is that Alibaba? I think you're talking about the Alibaba options. I haven't been following Alibaba, and I'm not big on trading IPOs because I'm all about trading charts and patterns, and usually IPOs do not have enough data for me to trade them. So I normally don't trade IPOs or stocks that haven't been trading for at least 6 months, because I like to look at 6-month chart patterns so I can have a feel for what the stock is doing. Because if I don't understand what the stock is doing or feel like I understand the pattern, that to me is gambling, because I have no way of determining if that's going up, if it's going down. So great question. The software is taking a minute to load up. So I tell you what, guys, what I'll do is we'll host another webinar, and maybe I'll talk about scanning the market, talk about premium software, talk about how to find these trades. So I apologize if I let anyone down, but we're at the top of the hour, and I thought the software would be up by now. So I appreciate all you guys jumping on the webinar, and then make sure you connect with me on Facebook, on YouTube, or make sure you jump on my email list. And hey, we'll be in touch, guys.